estate gets real.
I'm Rachel Davis.
And I'm Kate Baldwin.
I can never miss a Monday. Hey, look, it's never miss a Monday. Hey, look, it's never miss a Monday. Hey, look, it's never miss a Monday. Coach told me I can never miss.
Welcome back to REI Baddies, the podcast where real investors share real deals. I'm Rachel Davis.
And I'm Kate Baldwin. And around here, we don't talk fluff or theories. We do real stories. We jump right in it. People who got creative and did their first deal in 6 months or less.
Today, we are so excited to sit down with my friend Teresa Villaruz and hear her journey. Welcome, Teresa.
All the way from Silicon Valley. Now, she wanted freedom, so today we're going to be discussing how she got the freedom within our community. So I'm really excited. Thank you for coming.
Well, I am absolutely blessed that you guys have asked me to be on this platform. So thank you.
Awesome.
Love it. Teresa, for folks here who may not know you yet, can you just tell us a little bit more about where you're from, what brought you to the world of lending and finance?
Yeah, absolutely. So Teresa Villaruz, used to be based in Silicon Valley up till 4 years ago, where I moved to Monterey, California, which is just an hour drive south of where I grew up. Got into real estate. Actually, it was because my husband and I just recently got married in 2008 and decided, okay, well, what's the next step? We're trying to do this is the step in life, right? And decided to jump into real estate right at the very bottom of that correction. So 2011 is when we got into real estate. But yeah, and now freedom, I would say, or maybe time freedom is what we're trying to accomplish here and help others as well. Yeah,
I love that. I saw that in there. That was pretty awesome.
I love it. Teresa, some of your first deals, you talked to me about this a little bit in Monterey. You said you did them the knucklehead way. Do you want to explain what shifted for you?
Yeah, so we did it the knucklehead way, meaning like the traditional route, right? This is before getting in or learning about Pace Morby, about creative finance and creative real estate. Again, in 2011, right at the very bottom of that crash or correction, my husband and I decided to hey, let's just jump into it, right? Let's just get into real estate and bought our first property. And we know that real estate was the path to, essentially getting financial freedom, because 99% of millionaires out there made it because of real estate. And so we're like, okay, let's do that. So we bought our first property, and our strategy at that time was live and flip, because we couldn't afford 2 mortgages. So live and flip.
Yeah, that makes sense.
Yeah, and did that for about 10 years, or until the pandemic happened, because the first few months of the pandemic, construction workers were not essential workers at that time. Obviously it changed afterwards, but at the time we're like, we can't do this again, right? Like, who's gonna come and fix up our next project if this doesn't go back to normal? And so we decided to pivot and jump into buy and hold instead. And strategy at that time was short-term rentals. We didn't really like it, and decided that's not the thing for us. And then pivoted again, and we do midterm rentals now, which is really kind of like the sweet spot for us. We've done long-term, midterm, and short-term rentals, and for us personally, midterm rental was kind of like the strategy now. Yeah.
Pete, do you have a question?
Rental.
Yeah, midterm rental is essentially, there's short-term rentals, so Airbnb average stay is 7 days or less. Long-term rental is they have a lease and all that stuff. Midterm rental is, they don't want to sign a long-term lease because they're only traveling for either work or, just to stay for
nurses and stuff like that.
Right.
Yeah,
traveling
we do a lot of
nurses,
that.
military,
Military families kind of.
construction.
Nice. Well, and a lot of times they're not collecting. Well, you're collecting rent from somebody else than the actual person that's living there, right? Which not all the time, but it definitely helps with having to knock on the door and say, pay for the rent, and deal with long-term renters. And short-term is just a pain.
Yeah.
So let's get right to it with you, Teresa. I want to know how you did your first creative deal.
Oh, my first creative deal was actually for our boba cafe. Funny enough. Yeah.
Tell us about it. This is awesome.
Yeah. So, well, before that, when we were thinking about opening up our boba cafe, or actually got into the process of that, we were using our own money, right? And obviously, we were like being very tight ship and decided like, and this is before I got into, Gator with Pace, right? We were using our own money and then got into Gator, watched all the videos. I was like, why are we using our own money? I'm learning all this. Why don't we do this? So we did capital raise. We raised our capital actually we did a PMP. So our investors are also partners with our Boba Cafe. And then also, obviously, me being a infinite banking strategist, leverage our life insurance as well as part of, the startup cost of our Boba Cafe. So now we're starting the Boba Cafe using none of our money, except for like the first initial deposit for the rental space.
That's so freaking cool. I'm so impressed with you, Teresa.
Yeah, I'm really, I'm very curious on the sense, like, when, like, after you kind of left the corporate life and then you kind of got into, I find it very fascinating about you is that you're like a give backer. Like you're really, obviously your faith is really important to you, as it is for us, in your mentorship program, just kind of giving back, and then, your health scare and just how like it really, there's going to be two questions here, but more leading into one question. So, you go through this, you're young, obviously. You're a young mom, you get into this health scare, and you realize, and I think as a single mom and getting in my I'm 45, and I'm starting to like think, oh my gosh, I got to go to all these doctor's appointments. And this is just where I'm at literally today. So when I'm reading about you, I'm about to cry, but like what happens is something traumatic happens to me, and it's just me and I live. And now I have my family, but I don't want to put that financial burden on anyone. And I love how you were able to create this space within your tragedy to create this space to talk about these things, because obviously your bills got heavy. Obviously you had that life insurance, thank God, right? And not a lot of people do. So is that something you're incorporating in your everyday business? Or is it just something you're doing on the side when you're, how do you incorporate that? Is that
first? Why don't you fill in the background a little bit of what Kate's talking about, and then going forward from there? Because I know it, but I want to make sure that people watching understand.
It's a fascinating story.
Yeah, no, absolutely. So I wasn't born in a rich family, right? My parents had to work out. My mother had to work here in the United States while I was growing up in the Philippines just to help provide for the family. And my dad had to work in a different town. So I barely saw him, only saw him when he has days off. And so growing up, I didn't want my family, like I vowed to myself that I don't want my family to experience, at least my daughter and my children. I was hoping for more before, but my children wouldn't experience that type of poverty, right? I want to be present as my child was growing up. And so the first thing that comes to mind when we moved here was like, okay, well, I'm going to follow the American dream, which is go to school, get good grades, graduate, get a good job, work yourself up the corporate ladder, buy that, white picket fence home, and so on and so forth, right? So that was the idea that I was like, okay, in order for my family not to feel, experience poverty, I have to do this. And so that was my goal then, was like, let's just move up the corporate ladder, get as much money as we can, earn. And then unfortunately, what happened was that, in 2021, I was diagnosed with cancer, breast cancer. And essentially, the cost of my treatments, my doctor visits, surgeries, everything was north of $275,000. Now, I still get a pit in my stomach every time I say that number, because that number can paralyze any family financially, right? Oh. Most families who don't have, 78% of Americans right now are living paycheck to paycheck. And it's not because they're not making income, right? Most of these people are earning six figures or more, but they're still living paycheck to paycheck because the growth of their income doesn't go as fast as the cost of living here in America.
Like the Joneses. Some people are. But yeah, when you're making six figures,
right.
Okay. But going back to what you're saying, that's a lot of money. I mean, I read that. Now, did you have health insurance? Because I read, or we spoke, that you had, you did have life insurance, or you also had I read it.
It's okay.
When you
Teresa,
pass away, it's called.
Yeah, it's called the illness riders.
I
I
thought
did.
that was super fascinating.
Yeah, yeah. So my life insurance did have this thing called illness riders. Essentially, it's part of the contract that says even if you don't pass away, you get diagnosed with a qualifying illness such as cancer, heart attack, stroke, and several others, right? You are allowed to accelerate the death benefit, which is the money that your family could have inherited if God calls you home at that time. You can use that money to, accelerate that money to pay for your bills or loss of income or anything,
Yeah,
right?
I get
And
that.
so that is exactly what I did when I was diagnosed with cancer. Because my life insurance had that rider, I accelerated it, and which allowed me to really focus on beating the disease and healing,
Better
right?
be with your family. I love that. That is like,
Yeah.
I've never seen or heard of that in my life. So that's definitely, see, I told you we'd get something out of you that is unique.
Well, most Americans don't know this, right? And the problem is that they think life insurance is only good when they pass away. They're worth more when God calls them home. But life insurance could actually be, something that could help with situations where it could be life and death, right? I don't know where I would be if I was, stressing about my illness and then also stressing about how to pay for this. I might not have survived it.
Did you have health insurance though?
I did have health insurance, but health insurance could only cover up to so much.
I know, girl. And you guys were a successful family. Well, in your situation, God used this for the good, because now you're spreading that type of word. Now you're in a different place in your life where you don't take things lightly, right? So you excel. You took advantage, you took the situation you were in, you made the best of it, and look at what you're doing today. So what are you doing today? What is your normal, what are you doing within our industry? I know you do some lending, and tell us where you are in the business.
Tell us about your calendar, Teresa.
My calendar is just booked. And the reason for that is because my husband and I are serial entrepreneurs. When God opens up your eyes and says, hey, you're not doing what you're supposed to be doing in your life, as soon as he gave me that second chance, I'm like, okay, boom, 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 let's go, right? But right now, what I am very passionate about, and I'm actually incorporating so many things in this, is what I call the Thrive movement. Now, the Thrive movement is, we're all in the same group. It's my Mount Everest. It's essentially helping 5,000 people in 5 years get out of this just hustling to survive mode and finally thrive through a 3-pillar program. Yeah, and so the 3-pillar programs, one is what I call the Thrive Banking. So after my diagnosis and after God has helped me beat the disease and finally have my second life, I decided that, because most Americans don't know about life insurance and all the benefits that it could help, I decided to jump into life insurance industry.
Well, good, because me and Rachel are about to give you a call. Well, I has it. She's very well organized. I am not.
Dream
I'm
team.
I'm one of those creative entrepreneurs. So we're like little butterflies in the planets. Thank God Rachel came into my life, because I'm very creative, but I have a tendency to oh, look at that. Let's go play with that. You should see my screens. I have 4 going at one time. Unnecessary.
Yeah.
Yeah, I think that's really important. I think that's, what I really love about our community so much. You got Rachel writing books, right? You're working.
Teresa's going to write a book. Teresa's going to write a book in my cohort.
You're the one that's going to teach everybody. I mean, whoever thought that Pace Morby, you're going to enter into a world of Pace Morby community, and you're going to write a book. You're going to start this insane, and we're only on step 1 here with the life insurance, and you're going to continue that. But look at us, I mean, now she's trying to get me to have another hat and start helping people with their branding, and I'm like, whoa.
I'm so sorry that I'm trying to get people on active income.
I
It's
know,
the other AI.
Me and her are amazing together. I love her.
Okay. Yeah.
We are starting. I mean, I already loved you. I just wrote about, I'm going to write a book about you. Okay, so step 1.
Never need to pick me up. Kate's your girl, Teresa.
Huh?
I said, if you ever need a pick-me-up, Kate's your girl, Teresa.
Like, she's just buttering him up so much. I'm like, oh, is that really me?
Oh, by the way, I like to send these to people. So what I do is I do like I research you, and then I put it in the chat, and then I do a deep dive, and this is 9 pages of you, and everything.
9 pages.
And it even gave me the amount of money you were in debt from the thing. Okay, from your situation. Okay, so we're on Thrive. You started this in life insurance, and then
Yeah, so life insurance, got into life insurance, and no one wants to talk to me about life insurance or like getting covered just in case they pass away. Like, so I dug in deeper into what are the other benefits of life insurance, because obviously I was able to use it, and found about infinite banking, right? Learned about infinite banking and how you can leverage it to invest in real estate, use it for emergency and everything else. And so I was like, well, I love real estate, I love talking about life insurance, why don't I just combine it? And that's the birth of like the Thrive Banking movement. And so now with Thrive Banking, my goal is to help educate people about life insurance and how they could actually leverage that to get into real estate investing, so that their money is, one, not only growing at a bank-like returns, right? Banks are getting anywhere from 3% to 30%, but two, they're also transferring the risk, because they won't be using any of their money. They're going to be using the life insurance company's money, which is like what the banks are doing with our money, right? They're not using their money when they send out loans.
It's exactly what the banks are doing with our money.
Exactly. So we're just going to replicate what the banks are doing, because they hire so many smart people to execute all this and like really plan out the strategy. Let's just copy them. Let's copy them. And how can we copy them? Through Thrive Banking.
Yes. But Thrive Bank is already a program that you got involved in, or you started this Thrive Bank?
So I started Thrive Banking.
Okay.
Thrive Banking is my brand. I'm sorry.
Infinity Banking? Is that something you did?
Yeah.
Or okay.
Infinite banking. Yep.
Infinite banking.
Yeah, infinite banking is essentially that process, right? It's replicating what the banks
Thank
do.
you. Okay.
But I've rebranded it as Thrive Banking, because the goal is to help people thrive. Hence the movement of Thrive movement, right? So yeah.
You're the only person that I've heard really talk about having a movement in the community outside of Pays, which I think is super ambitious. And again, another reason I love you.
I don't know how I keep getting, every single time we do an interview, I am just amazed about.
I know cool people.
I know. I thought I was the cool one.
Oh, man. No, I tell people all the time, the only thing cool about me are the people I know.
No way.
Are you serious? You're number 2.
Yeah. So number 2 is then, once we have this policies, once we have your Thrive Banking set up, what do you do with it, right? It can't just be sitting with us. Obviously, it's sitting there earning anywhere from 6%, 8, 9, 10%. Mine is earning 8% right now. Yeah, it's great, but how can we leverage it so that it, grows bigger? And so the second pillar is what I call the Thrive Capital Collective, and it's essentially a investment club that we'll be building in fractional, right? And so now these people who have policies in their Thrive Banking equity in their Thrive Banking policies, they can leverage that to get into this investment club. The reason why I actually built the investment club is another gap that I'm seeing in Gator. I'm a Gator, right? So what I'm seeing in Gator is that a lot of people jump into Gator thinking that, okay, I'm only gonna pay, I only need $5,000 in order to get into EMDs. But as soon as they get into Gator and see all the deals that are coming through, the minimum are anywhere from $25,000 and up, which means that the $5,000 that they have in the bank is not enough to jump into these deals. And so what happens to these Gators who had these hopes of getting into Gator and that their 5,000 is enough, what happens is then they get discouraged after months of no deals. They get discouraged and they fade back, and then focuses somewhere else, right? So this is a way for us to okay, well, rather than just fading back and not moving forward with your dream of being a real estate investor or a lender, let's get that $5,000 in this Thrive Banking policy. Once you can access that, get that $5,000 and jump into this investment club where we pull our money so that, let's just say there's 20 of us in there. 20 times 5, that's $100,000, right? $100,000. And if a deal that's worthy of our funds come along, we can jump as a group, as a collective into these deals, so that your $5,000 could actually make you money and work for you. Yeah, so that's essentially what we're doing with the Thrive Capital Collective, which then moves to the third pillar, right? The third pillar.
You're the bank. Like, you're legitly.
Yes. So exactly, that is exactly what we're doing. We're building a bank, right? So once we have that collective, once we have enough funds, we then jump into the third pillar, which is what I love, what I call the Thrive Impact Projects. The reason for that is because, yes, if your deal it will bring us, a good return, it's not a deal for us unless it has impact in the community or in the society, right? An example that I would like to give is I'm not sure if you guys know who James Chavez is, but he's building a portfolio of co-living homes to house kids aging out of the foster care system, right? Because what I've heard is that 68% of these kids who end up homeless.
Yep.
It's bad.
They're homeless, they're on drugs, they don't have any guidance. You know who else is doing that, believe it or not? Who's the guy that was Batman? He's doing it in California. My gosh, Chris, I'll put it in the comments below, but he started it, and it's like this thing he started it
Christian Bale?
Christian Bale. It's this huge thing. Oh my God, I think I shared this before. He's making it so that kids don't get torn apart from each other.
Right.
Foster care. And he's never been in foster. So my point is you've never been in foster care yourself. Not you, but a lot of people are starting to realize, and I want to do so much, but it's hard to pin it down. But that's definitely the foster kids in our country definitely meet our TLC. I know that's not what you're doing, and James is doing that, so kudos to James out there. It's definitely something that needs, but yeah, he has, he's building a whole community for them.
Yeah, absolutely.
What got the group to focus on that? Because you talk about, I love how you phrase this, if a deal is worthy enough for us to invest in. I love that because it demonstrates you're not trying to just get a deal, right? We're being very intentional. We're being very intentional with how we're investing our money because our time is associated with that.
Right.
So what about this cause sat on your heart where you was like, this is it? I want to know that story. Yeah,
well, I mean, just, talking with James about these kids who are already in a rut while they're in foster care. And then once they become 18, they're kind of pushed into the, adult world with no mentorship, no coaching, and they don't know how to adult. And that's the reason why we have this, huge homeless epidemic. It's because we're not giving them the foundation they need in order to thrive in society, right? And that's kind of where we want to pin in the butt, during the foundational stage versus later, instead of giving them social security checks or whatnot, so let's pin it in the butt and get it while we can make an impact in people's lives. And so those are the types of deals that we want to fund, is that, yes, we have money, and yes, our goal is to help ourselves thrive and our families thrive. But how can we make our money make a huge impact in society as well? So let's make it, work even double duty by helping us and helping society as well.
I love that. You, Teresa.
Right. So say I just say I have $5,000. I just want to put it in with you guys. So I have this $5,000. How long do you keep the money? Do you have is it just something you put it in, you do one project, you can take money out? How does that work? What's the process in that?
Yeah, so it's going to be infractional. So obviously there's going to be some timeline there, right? It could either be by project or by time frame. So we're
Okay.
looking at, at the very most like 18 months of hold. And in that 18 months we want to recycle the funds in multiple projects during that time.
I love it. Kate, I love that she's like, hold on, I have
All right.
questions.
Well,
Maybe
no,
I'm going to
because
get
here's the
involved with it.
thing. So I'm a Gator, and I got into Gator because I had a lot of clients. They're secondary homes. They're luxury. I live in a very luxury place. It's the Keys. Pretty much nothing less than $1 million that actually is livable. And so I wanted to do it. And like you said, like you get into Gator. I mean, I'm not even kidding you. I have this pie much paper. I wrote and printed everything. I went through. I didn't even celebrate Christmas. I was like a crazy person. Like my parents are like, you can put that down. I'm like, so I finally got done after the holidays. Like, I mean, when they told me to go through those books and do all those tests, like I did all that because I didn't know anything about lending, and I don't like having a responsibility that big, somebody else's money. Like I just never had that. Like I just never done anything like that. So and they just made it out to be like this simple thing, and I'm thinking, I know the risk of doing real estate and then also like giving someone else your money. I've got experiences lending money to like friends, so like why? So my point is, going in a Gator, I thought, well, I have all these people that I know that have cash flow or they want to invest but they don't know what to do, and and I have all these friends. So I ended up doing wholesaling. But me and Rachel were like grouping back together now, and we stopped. There's the point.
You
So what
crack me up.
happens if, like, I love how you group it all together and you fluctuate that. How did you come up with that? Because I don't want to call Mr. Smith and say, he gave me 50 G's, and he wants us to, like, use it for the next 18 months and, like, kind of take it and move it and do things. Obviously, giving Mr. Smith a breakdown of when the money is moving and stuff, right? Or am I on the right path with what you're doing? So you can take Mr. Smith's 50K, we put it in the pot, you guys do your investing for 18, 24 months. Do you just see it grow, or do you send your people like a spreadsheet?
Why don't you explain the process, Teresa? That way people can understand it's okay, Kate.
No, this is like seriously what keeps me up at night, because I never understood how that worked. And then
She's gonna if you stop talking, she'll explain it to you. Tell us your process, Teresa.
Yeah. Let me walk you through the entire process.
Okay.
Let's start with the foundation, right? With the Thrive banking policy. The reason why that's the very foundation is because it's adding a third layer of protection in the program. So the first layer of protection that we have is obviously all the things that you do when you're doing real estate. That's deed, right? The lien, having like first or second position liens, having all the contracts, everything like that. So that's the first protection. Second protection is I'm actually partnering with Melissa Palmer. So you guys know her.
Oh, awesome.
I just talked to her yesterday. I introduced her to two more lenders.
Rachel reminds me of her. They remind me of each other.
So Melissa Palmer, funny enough, is my neighbor, not my next door neighbor, but she lives here in Monterey, right? So we're actually going to require every borrower to go through her program first, so that they're vetted properly, so that we know who we're lending our money out to, right? So that's the second layer of protection. The third layer of protection is the Thrive banking policy. Now, the reason why that's protection is, again, with the Thrive banking policy, your policy has two components to it: the life insurance, obviously, so your family's, well protected, financially at least, if something happens to you. But second is what we call a high yield savings account within the policy. And that is what you can leverage as collateral to borrow money from the life insurance company. So the money that you're actually lending out or putting in the investment club is not your own money. It's the life insurance company's money. So if anything goes wrong, even after the first or second protection of your money, if anything goes wrong and the deal goes south and we lose all the money, knock on wood, hopefully pray to God not, right? If we lose that money, it's not your money that we're losing. It's the life insurance company's money. Your money is within your policy, still earning that 6, 7, 8%. So that's the three layers of protection. That is the very reason why we have Thrive Banking as the foundation of this movement. Now, once we get your money in the club, the contracts would be anywhere from 1 year to 18 months, right? So obviously you'll see that some of these deals that we have would be, fix and flips, for example, right? And usually it's anywhere from 3 to 6 months. Once we get all the funding back and it goes back into the club, it doesn't go back to the vendor. It goes back in the club. Once we have that money back, then we'll just rinse and repeat, go to the next project until that 18-month mark, where maybe like the investors would want to liquidate everything, and then that's when we'll give it back to them.
My follow-up question is, if someone's watching this and they're like, dang, Teresa's smart, I want to do that with my money, how do they get a hold of you?
How do they get a hold of you?
Yeah, absolutely. You can reach me on Instagram. That's the easiest way. Build Wealth with Trey. So Trey is my nickname. It was given to me by my best friends. So Build Wealth with Trey. But then also you can just jump in. I offer complimentary blueprints, complimentary Thrive Banking blueprints, and you can get yours at thrivebankingstrategy.com. Fill out the form there, obviously, because these are custom blueprints specifically for your needs and goals and everything. It will take time for us to build it. So it's not like, you fill out the form and boom, there's your blueprint, because it's not a cookie cutter thing. We will actually put the time and energy to do the research and make sure that the numbers that we give to you are custom to your goals.
That's so cool, Teresa. I'm so happy I have these people in my life. You have no idea. I think anyone who's left corporate America and now we're around these people, I'm like, oh, this is why I hated corporate America, is all these people were hanging out in entrepreneur land.
Right.
Yeah, I've never worked corporate, so that is
lucky you.
Very true.
We have a question we ask every guest, Teresa. And I got to tell you, I'm pretty sure your response to this will be much different than Mike Davis's or Adam Catledge. But just imagine that after I ask you.
Well, they're boys.
What does it mean to you to be an REI baddie?
Oh my goodness. I would say it's impact. It's not really about me. It's about how can I leave a legacy in this world and make an impact. Because truly to me now, it's like, I want to leave this world better than when I entered it. So it's impact.
You're already doing it. That's what's so cool. You already are in REI.
Yeah, so we're going to continue to spread this amazing thing you're doing. This is fascinating. I think we should definitely get you back over here. We should just really dig into all this, because I think that it's really important that people understand from this specific podcast how it is important to make sure that life insurance isn't just something that you're putting on the back burner. The idea that this has happened, that you went through that, and that you were able to really just focus on your family and your health, that is just amazing. And then, like you said,
inspiration.
It's very inspirational. So thank you so much for coming on and spending that time with us. I know we're 3 or 4 hours behind you. So
here's the thing. I am going to keep my eyes open for the boba shop, because I'd like to talk to you, Teresa, again, 6 months after that's been running. I'd love to hear kind of the good, the bad, the ugly.
Love it. Building these relationships with you guys, because I like that idea too. And I have to tell you, so our shop is down the street, right? So all the kids are obsessed with it, and I called it Bobo forever, and they're like, Miss Kate, it's not Bobo. And I still sometimes forget what it's called, but the lady that they run it, they're a family in town, love them to death, and she has 1 million followers on TikTok. She is a hoot. So I will send that to you, because she's in there shaking and making her things, and oh my gosh, she's so cute.
Oh my gosh. Well, I want to take an opportunity to just thank the people who've turned in to this episode of RA Baddies. If you loved this conversation, please make sure to subscribe, share it with a fellow investor, and connect with us on Instagram, LinkedIn, or YouTube. Again, without us having that, we can't attract more baddies like Teresa to bring on the show.
Love that. So,
well, until next time, keep closing, keep creating, and keep being a baddie.